Axel. Welcome to the ValueDACH YouTube channel. You are an emerging markets value investor, but you don't invest in China and India. Why is that so?
Thank you very much for the question. I prefer investing in markets that are easier to understand. And I've been to China, I've been to India, and both of them are obviously huge countries with massive populations and a lot of simultaneous competitive forces that I just don't can get a grasp on. I just feel too much of an outsider. On top of that, in China particularly, too many frauds have been going on that I don't trust most companies' books, and therefore I avoid them.
In your fund, what kind of return do you expect?
I don't have expectations for the fund. However, for every individual stock that I'm buying, I expect at least to double my money. And it's not that I succeed with that all the time, but I think I have to have a few companies that do very well, a few stocks that do very well in order to make up for losses. So if a stock has 10, 20, 30% upside, in my mind, I would not touch it. It's not enough.
Let's look a bit deeper in your fund. You're investing in countries like Russia, Nigeria, Egypt, Uganda, Ghana, and also in Asia in some countries, Vietnam for instance. Let's take a look at Russia. That is a country where people say it's not investable. What's your opinion on it?
I totally disagree. I think it is very investable, and I've seen many great companies, very great businesses, attractive stocks, and many of those companies are managed for the benefit of their shareholders, and that's all their shareholders, including the minority shareholders, and they're not run by the Kremlin. So I like Russia at the right price.
Can you name some companies in Russia you like?
Certainly, one company that comes to mind, one of the biggest holdings, is Novorossiysk Ports. Trades in Russia and Moscow quite actively, quite liquid. It's not very investable in Germany, Frankfurt, but it's a port operator. NMTP is a symbol, and the stock's trading with very attractive valuations. The port business is a quasi-monopoly, and the stock has about north of 20% free cash flow yield. Dividend yield is 7-8%, PE is 6 or so, and that's a company I would buy day in, day out. I bought it at much lower valuation, but even at this appreciated prices, I think it's still attractive. We used to own Moscow Exchange, which runs the stock exchange in Moscow. Monopoly business, not growing tremendously, but still fantastic business, and that I like a lot.
What's your opinion on banks in Russia?
I like them. I like Sberbank. I think that's a great business. It's a great, highly profitable bank in terms of return on equity, and the stock is cheap. We currently own Bank of St. Petersburg in the AVH fund, and that's as well not as good of a business because the return on equity is pretty low. It's in the high single digits, 8-9% or so. But then you got a stock that trades at 3 times earnings, 70% discount to book value. So I think it's a very attractive stock that has a lot of upside without anything really good has to happen. It's priced as there be a major crisis, but there's not. They just recorded record profits in the last quarter.
Let's stay in the financial sector, but go to Africa, and to take a look at the financial sector here and banks here. You like banks there too. But compared to Europe, what is the state of the banks in Africa?
We own in Africa Guarantee Bank in Nigeria, which is the number one bank there. And Nigeria feels like had a recession for the last decade or so. Ever since the financial crisis, then oil prices collapsed. The country is a big oil exporter. So things have not been going well for a long time. Despite that, Guarantee Bank has been profitable and been growing throughout this time, did not have any big losses to the oil and gas industry, did no big write-offs, a very attractive return on equities in the, like 30% ratio, and they have 5-6 times earnings and pay 7-8% dividend yield, and I like it. So, and the top 2-3 banks, they're all traded similar valuations. When the retailers, the Unilever or the Nigerian, the breweries all traded 20-30 times earnings, and people love them, they hate the banks. And for me, I think if you believe in Nigeria, you want to buy the consumer names, you can as well buy the banks, the top banks. In general, I think when investing in emerging frontier markets, I used to buy the second and third tier banks because they are much cheaper, and I found out they are much cheaper for a reason. And I think I generally stay with the market leaders.
What reason is this?
They're not as good. They always stay small and shitty, and they're undercapitalized. In Nigeria, for example, Sky Bank was a bank that was always cheap until they went bankrupt. In Kenya, we had it where the banks got consolidated, and then the smallest banks were undercapitalized. So it seems to be an industry where you don't get rewarded for being too clever. Just buy good, solid, great companies and then you buy the market leaders. If you can't get the market leaders at good prices, probably don't invest in the banks.
How's the situation at the stock exchange, for instance, in Nigeria or other developing countries? How could you describe the situation there?
Well, what's been going on in Africa is the market. I mean, I started investing there 15 years ago, and I was very early. There were a few other people who were bothered traveling to Botswana and meeting companies, and Zambia. All those markets, they were barely existent, but the valuations were very attractive. So I bought a bunch of stocks there, had very heavy exposure to Africa early on, and then a lot of other people got excited about Africa, and the valuations went through the roof because of all the other investors. I didn't quite notice it. I thought they went through because I'm too smart. And then came the financial crisis, and the stock prices all collapsed because the stocks were bought by funds from London and New York, not by local funds. And so even though the African economies didn't really expect any or had any recessions in those years, in the financial 2008, 2009, the stock market still collapsed because all the investors were sitting overseas. And the countries never recovered, or the stock exchanges never recovered. So we're having right now, again, a continent that's largely forgotten with some quite cheap stocks and very poor liquidity. I mean, me and my colleagues who invest in these crazy places, we had high expectations, expected those markets to develop, which has never happened.
So the valuations are still cheap there?
They're cheap again. If you're selective, they're cheap, but because of the poor liquidity for many large funds, they're not investable. The whole sub-Saharan Africa, ex-South Africa, there might be only 20 companies where you can put $10 million in tomorrow. Everything else says you have to wait.
How's trading happening in, like, for instance, Ghana or other countries?
You know, it's getting all electronic. It's getting a little bit better. It used to be not too long ago that people would sit around a table like this, meet for 30 minutes and discuss their customer orders, and they say, oh, I got Guinness Guinness Ghana, 1,000 shares on the offer. Somebody else would say, okay, I got the bid, and then they would come to agreement, and after that they would have a beer. And now it's getting more electronic, but the volumes have not got much bigger. And for some reason, how they all work, all the markets, I still haven't figured it out sometimes, because sometimes it doesn't make sense to me. But overall, they're not that crazy different. And you can buy, if you look at a brewery there, and the brewery in Ghana has the same problems, the same opportunities a brewery might have somewhere in Asia, or a brewery in Germany. So they're similar industries, and it helps if you've been around a little bit that you understand that, and you don't need that much country knowledge.
Interesting. What are the criteria for you to invest in a company? What does the company have to have?
It has to be good and it has to be cheap. What's good? High return on equity or high cash generation, along with low PE ratio, strong cash flow. Usually those things come together. If you just have a low PE but the free cash flows are there, it's a big warning sign. The price to book value, I think for many businesses, for example, is not that relevant, unless maybe it's for financials different. But what I want is high profits, profit margins, so businesses are not squeezed for the last penny, which pretty much excludes, for example, textile manufacturing, where whoever does those socks for a penny less is going to get the contract from Europe, from Zara for the next quarter, and nobody cares where they come from, whether it's from Pakistan, Bangladesh, or how fancy the machines are, unless you get the right quality for the right price. So, and it is more attractive to have a tobacco company or a cigarette company, or the breweries, or banking, which can be good. And sometimes it's little niche operators that happen to be good in one country. You find the stock, but you don't find that many stocks in other countries. For example, there's maybe advertisement company in Kenya, which is a WPP subsidiary called Scan Group, and that stock might be cheap. I'm not sure. I don't own it, but you can't say, I like advertisement now. I want to find one in another country. You just can't find one. Even if you look to Czech Republic or to Norway, you might not find another listed advertisement company. So you just have to see what's there, and it's all about eliminating stuff that you don't want. So looking for good companies and then cheap valuations. Many great companies are there, but I'm looking for companies that trade with very low PE ratios in 4 or 5 or so, and are like high dividend payouts. Dividend yields of 10% or so get me excited.
So you look for P's of 4 or 5 and you sell at P of 10, or?
Yeah, hopefully. Hopefully. Sometimes I let it run. Sometimes I sell too early. Yeah.
What role do dividends play in your process?
I like them. I like just the process of collecting them, and B, it shows me the cash is for real and that the companies care about their minority shareholders. Sometimes, I invest in companies that don't pay any dividends, and I have the discussions with the management, say, you got a very great business, you got opportunities to expand, you're highly profitable, and I can't grow my fund 30% per year, but if you can grow your business 30% per year don't pay me dividends, I don't want them, if you can use them very productively. But in a lot of cases, it keeps management focused, and I'm biased towards dividends, generally speaking.
Is there a culture of buybacks in the markets you're investing?
There is not, no. Sometimes there's a culture of issuing new shares. I mean, giving bonus shares, which doesn't serve any purpose whatsoever, and just makes the accounting, for me, so complicated, because you get this dilution, and calculating the growth in earnings per share is a little bit complicated. But share buybacks generally do not happen, and it's probably a good thing, because a lot of those markets, the liquidity is poor, and the last thing you want is even less shares outstanding, even less liquidity.
And is there a culture of activism in this market?
There's not, and I just talked with a friend of mine about Korea, where you find many good, cheap companies that have lots of cash, and they don't know what to do with it. They don't pay dividends, they don't do buybacks, and you'd wish that there be some local activist shareholders to change that attitude, but there's not. Even in Japan, there's been some, but across those markets, no. You vote with your feet. You don't like what the management is doing, you sell your shares and move on.
That's interesting. How do you deal with currencies?
As my kids say, suck it up, buttercup. Currency risk is there, and it's probably the biggest risk to the portfolio. It's not the political risk, it's not corruption, all those other things that people care about, are concerned about in investing in emerging frontier markets. It is about you wake up and the Ukrainian government is devalued by a third, or the Kazakhstani, I forgot whatever their tengel or whatever it is worth much less than the morning before. And so that's a risk, that's for real. Stock prices over time, they will adjust, but you have currency depreciation, especially when you least need it. When the markets go down, foreign investors sell local stocks, local bonds, and buy back US dollars, so then the currency falls even more. And over time, markets recover, the currencies recover, and it's a wash. You don't lose much money long term on currencies. You don't make money on foreign currencies. But the problem is you lose it when you least need it. And so when the times are good, you make even more money, which is great, but you'd rather have it that you don't lose as much money in the crisis years.
Let's go a bit into your research process. You're traveling a lot, going to different countries, but there are also interesting sources where you can find information besides the company reports.
No, the company reports, that's for most part, that is it. And they can be quite good, and a lot of times they're in English language. I used to, sometimes when I don't understand the company reports, I look see if there's any research report from any analysts. And when I do that, I already know that I'm in trouble, because if I can't trust my own judgment, if I need somebody else's expertise, then I already know I'm not going to invest. And that's even more so than when I visit the country a little bit later and I meet the analyst who is 20 years old, and it's not that I wish to be 20 years old again, but he's got zero business experience and zero experience as an analyst. But when you sit far away in your office in California, you say, oh wow, the local analyst thinks this and that, not realizing that the local analyst just finished high school and is really not that great of an analyst probably quite yet. So no, there's no big local knowledge, outside knowledge. I read the annual reports, and if I don't understand them, if I don't understand the business, I will probably very likely not invest.
Are there any blogs you read or any websites?
No.
And how big is the coverage of the companies you're investing in, usually?
Can you specify? I don't understand the question.
Like, we already talked about the analysts and that are covering the companies in your market. how many analysts are covering a company usually?
Typically zero. A lot of times I invest in companies where the locals don't even know that they have the company exists. Especially in markets like Vietnam, it's going to be small companies with zero analyst coverage. And yeah, I mean, in other markets where there are very few stocks, there might be one or two analysts, but it's negligible. The funds then, the shares are held by local pension funds many times, and they never sell. And it's a few foreign investors, and they do their own work, and they talk to management, and they either like what they hear or they don't. And the management is great to talk to, but really you have to do, I think, the research first and make sure the company is profitable and is as good just by the numbers rather than being charmed by financial or the CEO who got there just because he's the best salesman. And he has a salesman job, and he charms you and you like it. He got this great vision of the future for the company, the country. But if the numbers don't back it up, I would not invest.
And how long is your usual time horizon to hold the company? How many years do you expect to hold it?
A few years. I'd say after a few years, it should have done either very well, or if the business has deteriorated, I sell, and I very happily sell very quickly if I made a mistake, if I didn't analyze the situation correctly or the situation changed. I'm happily take my losses and move on to look for something better. I always believe you don't have to make back the money the way you lost it. Just because I bought the stock at 100, now it's at 50, it's my problem. The stock doesn't care about me, and it's not going to go back to 100 just because I wanted to. So I'd rather sell it at 50 and see what's the best opportunity with the money today.
Thank you very much for the interesting interview.
Thank you.